Hey guys, Cody coming at you again with another video. So just a heads up right off the top, my dogs are in my room with me, so if you see some random tails wagging or barking or panting, that's why. It's been a while since I posted a video on here, so I wanted to take some time to share some tips and tricks for small businesses, sole proprietors, and self-employed individuals to help maximize their savings around tax time. Now, some of you are probably saying, well, Cody, tax season's over. Where were you 6 months ago? Why are you sharing tips and tricks for taxes in August? And a common mistake of small businesses is waiting until tax time to start worrying about deductions or savings. And any accountant will tell you maximizing your tax savings is a year-round commitment. And hopefully these tips can be of use to some of you watching. One thing that you can do as a sole proprietor is to hire a family member. A lot of people actually don't know that sole proprietors don't need to pay Social Security and Medicare taxes on the wages of their child or unemployment tax. So if you couple that with your child being in a lower tax bracket, you've got yourself quite a bit of savings right there. And as a little bonus tidbit, if you open a Roth IRA with their earnings and put away just $5,500 for 3 years, let's say from age 15 to 17, and never contributed again, they will have $2.5 million sitting in their account at age 70, assuming the IRA earns 10% per year. Also, if you hire your spouse at your small business, you may be able to double the money you can contribute to a retirement account, therefore reducing your taxable income. You should also follow your spending to track deductions throughout the year. If you use accounting services such as QuickBooks, they actually make it quite easy to just scan in your receipt and then categorize that expense. But if you're someone that doesn't like messing with receipts on a regular basis, opening a separate bank account for your business is a must-do, and that's always a good practice anyway when you own your own business. Get a debit card for this business account and use it on all of your expenses. Then when your end of the month statement comes in, go ahead and categorize those expenses instead of doing it day by day by day. If you do that and track your income throughout the year, it'll help you keep an eye on your adjusted gross income, which is an important threshold for many tax credits and deductions. A self-employed worker's taxable income can be reduced by putting additional money toward a traditional retirement account. Traditional meaning that the money isn't taxed until the funds are withdrawn in retirement. So for 2020, small business owners under 50 can contribute up to $6,000 per taxpayer to a traditional or Roth IRA, and those over 50 can put up to $7,000 toward their retirement savings. So contributing to a retirement account can reduce your taxable income. A deduction that's often underused is the home office deduction. So if you have a home office, deduct it. The home office deduction is kind of seen as a red flag for an audit. Whether there's truth to that or not, I'm not sure, but as long as you keep accurate records and tell the truth, you'll be fine. This home office space must be exclusively used for your business. So if you work in front of the TV or on the living room couch, you're probably not going to be able to claim that unless your job involves watching TV or testing sofas, which is unlikely but totally possible. So if you do have a space dedicated for your work, even if it's just a desk and some supplies in the corner of your room, you can take the home office deduction. You'll need the total square footage of your home in the square footage of the space that's dedicated to your home office. There's actually a simplified method where all you need is the total square footage used for the home office, capped at 300 square feet, and then multiply that by $5, and that would be your home office deduction. The non-simplified method involves using the percentage use of your home and factoring in some home expenses such as utilities and depreciation. This method, it's usually more beneficial when the home office is more than 300 square feet or you live in a more expensive home. I should also say, if you use your home office as an employee of another business, you can't claim this home office deduction anymore. You also shouldn't ignore your auto expenses. Keep track of the mileage used exclusively for business and then the total miles for the year. Figure up the percentage of your car's mileage that is attributable to your business and apply it to your auto expenses for the whole year. That's one way to track auto expenses, and the other way is just to take your vehicle's business miles and multiply it by the standard mileage rate, which for 2020 is 57.5 cents per mile. Depending on your vehicle's expenses, the first way may result in a higher deduction. You should also be sure to track your carryovers. This is where it's beneficial to have an accountant or at least some sort of accounting software that keeps track of carryovers for you. Capital losses, net operating losses, the home office deduction, and even some large charitable donations are a few things that can be carried over. It's always a smart idea to hire an accountant to help with your taxes, but these tips can end up saving your business thousands of dollars in taxes alone. And taking some of these extra steps will also likely make your tax prep fee decrease because you've already done some of the work your accountant may normally have done for you. Because Illinois small businesses account for 60% of the net job creation in Illinois, it's important that we help them thrive. And if I'm elected your state representative, I will fight every day to breathe life into Illinois small businesses. I just wanted to thank you for checking this video out, and I hope that maybe some of you can take something of use away from this. Take care, everybody.